Here's a check on markets now. And Asian equities continue to fall as investor fears over the coronavirus saw a widespread sell-off today. In a bid to stabilise markets and prepare for the worst, governments and policymakers have called for greater insight into the global economic impact.
The first policy meeting of the year for the U.S. Federal Reserve should have been about rates. But at the Fed's news conference, the coronavirus and the economic repercussions of the epidemic were in the limelight. Jerome Powell, the Fed's chair, emphasized how important China's economy is to the global economy. But he also cautioned that it was too early for the central bank to speculate on an economic fallout.
There is likely to be some disruption to activity in China and possibly globally based on the spread of the virus to date and the travel restrictions and business closures that have already been imposed. Of course, the situation is really in its early stages, and it's very uncertain about how far it will spread and what the macroeconomic effects will be in China, in its immediate trading partners and neighbors, and around the world. So in light of that uncertainty, I'm not going to speculate about it at this point. I will just tell you that, of course, we are very carefully monitoring the situation.
But a different tune in China, where a government economist has already warned that the economic fallout from the virus could surpass the SARS epidemic of 2003 and slash China's growth by a full percentage point. In Wuhan, the city at the epicenter of the deadly virus, the streets are empty. It's just one of the 17 cities under forced lockdown, and that's affected both residents and firms. International companies including Apple, Starbucks, Pizza Hut and KFC have temporarily closed up shop. And across China, other multinationals, including Goldman Sachs, Google and Samsung Electronics, have restricted employee travel and extended the Lunar New Year holiday. In the country's capital, Beijing, residents are already convinced the virus will have a big impact on the country's economy.
我感觉肯定会，毕竟这正值春节，也是正值放假，然后这个旅游，你看北京这会儿大街上基本上也没什么人，很多人想出去也出去不了，肯定会影响，而且我感觉影响特别大，所以就是呼吁以后大家，都说湖北这边吃这些野生动物，我希望就是这些吃野生动物或者吃这些没有经过检疫过来的东西，这就是大家不要吃，然后就是这真的是给国家，我觉得是一场灾难。
That fear is spreading across the region. In Japan, where health authorities have registered 11 cases of the virus, Prime Minister Shinzo Abe has announced he will, quote, scrutinize the economic impact, in particular the hit to tourism. And in Taiwan, newly re-elected President Tsai Ing-wen vowed that the government will stabilize markets to reduce shocks and assist companies that are affected by the outbreak. China has yet to announce measures aimed at cushioning an economic fallout. Despite its ongoing trade war with the U.S. and growth that stalled to a 30-year low, Beijing has been steadfast with its measured approach to its growing economic problem. But this virus, deemed an emergency in China, might see policymakers break all the rules.
So what will be the economic fallout of this coronavirus outbreak? For that, Tom Elliott joins me now from London. He's a senior international investment strategist at deVere Group. Tom, should we be concerned about the fiscal health of the global economy?
We should. I'm not entirely sure, though, that the current epidemic would be the focus of where I'd be concerned. I think that, first of all, the Chinese authorities are to be congratulated on being so open about the data and their feelings about the impact on the Chinese economy. It makes a huge difference from the SARS outbreak some decades ago, and is reassuring. But we are obviously, investors all around the world are nervous of this. But I am actually more concerned about more fundamental issues regarding monetary policy in the Western world, the zero-bound interest rate policy. How do you get out of that before the next global downturn? And I'm less concerned that this might be the trigger for the next downturn. We often panic in moments like this, and perhaps investors sell prematurely only to regret it. And I certainly don't want to sound blasé, but I'd be reluctant to sell assets now. I'm hopeful that the authorities will get the better of this sooner rather than later. Certainly, history, as an experienced investor, history suggests that these problems are never quite as bad as they seem at the time. As I said, I don't wish to seem blasé, but that's my view.
And taking that view into account, Tom, I do understand your perspective there, but we are already seeing evidence of some kind of paranoia. We are seeing evidence of selling in Asia as well. Does it bear any merit comparing this to what happened back in 2003 with SARS? Because we did see a global economic impact there. We did see a rout on the markets.
The comparison is actually very fair to make. But two points. As I said earlier, the Chinese authorities are a lot more open. This actually means that we shouldn't have so much of the fear of the unknown. If you like, we're afraid of the known, unlike when SARS was out, we're afraid of the known and the unknown, because the unknown here is limited to how the disease will mutate. It's not extending also into, is China lying about the cases? So in a way, it's not, we don't have that risk. The second point to make is the S&P 500 is still up year to date. Admittedly, the US 10-year has come down, the yield's come down, and curiously enough, it seems to be the bond market that's more sensitive to this than the global equities. And when it comes to equity markets, I'd have thought that for most global investors, they will have a relatively small exposure to the most immediately affected aspects of Chinese life that are affected, such as transport, hotel and leisure. They will, though, as will everybody else, all investors, have exposure to longer-term effects, such as will Apple, for instance, and other US manufacturers of electronic goods who do their manufacturing in China, will they run short of stock? What about the suppliers to these companies, the Korean makers of flat glass to these electronics factories in China? Presumably they're now sitting on stock. And what about commodity producers in Australia? So longer term, the longer this goes on, the more global investors have to think about the global implications, since China is well and truly in the supply chain. But as of yet, it's too soon to really have a handle on how severe that might be.
And it's worth bearing in mind that back in 2003, China's economy only accounted for about 4% of the global world economy. Today, of course, that's surged to some 17%, and we're a lot more interconnected now. Tom, let me ask you this question. Prior to this outbreak, we did see financial market demands for more extreme action, such as quantitative easing, as China's economy slowed. Do you anticipate that China's policymakers now are going to step in to support the economy to mitigate the fallout from this outbreak?
They may reduce their reserve ratio, which is a monetary tool that they use further. They may cut interest rates, but I think that's not so like. That would be the second aspect, second tool they use if they have to. They are nervous of getting the economy fired up again just through credit growth. I think what we're going to see is reduction of the reserve ratio, which is what they pay banks to, the amount that banks are required to keep in their central bank account relative to the loans. We'll see a reduction of that. That should boost loans. And we'll see some bit more fiscal spending, tax cuts, government spending announcements in order to boost the economy. Longer term, what I'd really like to see throughout the world, and this goes back to my earlier comment about central banks being at zero bound, what do you do with it? I would like to see helicopter money, checks in every household in Europe where they've got negative rates, and parts of Asia that are suffering from very low inflation, try it there, like Japan. And really give that a go as a way of getting out of this funk that central banks are in.
All right, Tom, thank you very much for that perspective on what we're seeing here with the health of the global economy as the world battles this one. Tom, that was Tom Elliott there from deVere Group.
Now, we're going to be circling back to more information on the Wuhan coronavirus outbreak later here on Asia Tonight, and of course across the day on CNA TV and radio. Plus, there are updates anytime, all the time at cna.asia. You can bookmark that website or even download our CNA